company sells a factory that's listed $100 on its balance sheet for $80. So it's selling the factory for a loss. And there are also a 30% tax rate assumption. Selling a factory, whether you make a profit or whether it's a loss, it's not going to be recorded under operations. It's not an operating revenue or operating cost. Rather, it's going to be recorded under other income or other expenses. Sometimes it's called non-operating income, non-operating expenses, something like that. So there's going to be a $20 loss on this transaction. It's going to decrease EBT by $20, and assuming a 30% tax rate, tax is going to be down by 6. So the net effect on net income would be minus $14. This is the same again. It decreases the starting point by 14, decreases retained earnings by 14. And this is where it gets a little bit tricky. So we have to record on our cash flow statement somewhere. We have to make a $20 cash adjustment. And also we want to record the $80 that has been actually sold. So the $20 loss on investment is going to be recorded under cash flow from operations. So loss on disposal would be added back to cash flow from operations was 20. And whatever amount that you have received for selling the assets are going to be recorded under cash flow from investing. So why we show these two different separate line items, why we don't just net these and write it just under cash flow from investing, it's to provide as much information as possible to the investors. So this is like pretty much like a formula. We write the losses or the gains under cash flow from operations, and we write down the actual cash inflow from the actual sale of assets or properties under CFI. So this 20 is added back because it's a non-cash transaction. This $80 adjustment is actually cash coming in from the asset sales. And as a result, the change in cash in the end is plus 86. And we can see that $80 comes from asset disposal, so you have received $80. And the remainder $6 is the tax shield effect. Changes in cash would increase cash by $86. And we remember that the book value of this asset was $100, so PPE is down by 100. So in the end, it balances minus 14 on the liabilities and equity side and minus 14 on the assets side as well. So this one is a little bit more complicated than the cases that we have seen before. So in the income statement, pre-tax income falls by 20 and net income falls by 14, assuming a 30% tax rate. Net income, we start from minus 14, but we add back $20 loss since it's a non-cash transaction. We also know that $80 was received, the full proceeds received, and we write it down under a CFI. Cash is up by 86. PPE is down by, the book value is down by 100. And the liabilities and equity side is also down by 14 because retained earnings fall according to net income decrease. We're going to see just one more example, the opposite example where the company sells a factory for a gain. So it's listed at $100 on the balance sheet, but we sell it for $150. So in this case, we record a $50 gain to the income statement. and everything's the opposite. And this time we, have to record tax. So $15 of tax is going to be recorded, and net income is going to be up by $35. We start from $35, and remember that we record gains, adjustments on the cash flow statement. So gains on disposal, we're going to adjust minus 50 to cash flow from operations. And under cash flow from investment, we write a positive $150 inflow of cash from asset disposals, and net changes in cash would end up at 135. And if you think about it, this 135 is correct because we received $150 of cash from this transaction. However, we have to pay $15 worth tax due to this transaction. So on a net basis, we receive $135 worth cash. Cash is up by 135, and the book value amount is deducted to PPE, so the balance sheet again balances. So whether it's the case that makes a loss or whether it's a case where it makes a gain from the asset, sales, remember that we record gains or losses under cash flow from operations, and we record the actual disposal amount, the actual cash that has been received under CFI, and the rest would be similar to our usual practices. So that's it for our basic questions on our three statement connections. In our future videos and our later lectures, we will cover some more of these type of questions. We'll cover more intermediate and advanced connectivity questions. But personally, I think if you have understood all the basic questions, there's nothing more that's going to surprise us in the future.